sports. And right now, folks, we're going to talk to our man Steve Rhodes, as we do each and every Monday at 3:15 p.m. Eastern Time. You can check out Steve's outstanding program, folks, The Trader's Edge, every day, 11 a.m. right here on TFNN Tiger TV. And check out his daily newsletter, Mastering Probability, folks. You can head on over the front page of TFNN, right under that newsletter tab, hit that subscribe button. It comes with a 30-day money-back guarantee, folks, whether you sign up for a month or 149, or you save some money, 22% on the 6-month or 33% on the year. Check it out, and you get a number of great webinars when you do that, and it comes with a 30-day money-back guarantee. Can't go wrong. Steve Rhodes, good afternoon.
Hey, Tommy, how you doing? Good to be with you.
Good to talk to you, man. How was your weekend?
It was a wonderful weekend. Another weekend of good. They forecasted. You know what the weather people are like here in Florida. I think it's just a swag, because they were saying it's going to be raining.
Go ahead. They got me Saturday. Go ahead, Steve. Yeah.
Well, they said it was going to be raining all weekend, so I figured, there's going to be no sports, no golf going outside like that. It was a perfect weekend. In fact, Saturday was great. It was a kind of cool down here, comparatively speaking. Yesterday, went ahead and made the adjustment. We got back to humidity, but hey, how about your Buccaneers?
Those little glimpses, right? That that the heat and the humidity are abating a bit for sure.
Yeah. How about
this
your Tampa Bay Buccaneers?
Not abating just yet. What do you think, man?
Well, okay. So with regard to the market, here's what I wanted to do. I got a couple of different emails. So I had to go back and take a look at, see what the folks were talking about. Paul Tudor Jones was on CNBC this morning. And so the key points that he made, he said that today's market, in his mind, is reminiscent of the setup leading up to the bubble, the dot-com bubble back in 1999. It's the difference between now and 99 is some monetary policies and so forth. But he's suggesting that the market still has more room to run before we get to that bubble out there. So I thought, and the questions that people sent in is, how high will the market go? When will we know? If there's logical questions, right? So he just said, hey, sure, we're likely to continue to head higher out there. And I think in the game of stock market musical chairs, the real question is, and what I focus my time on, is how will we know when the music is stopped? And some people, again, a couple of emails that came in, could I give them a price projection as to where the markets are going out there? And that's how some folks would take a look at it. For that, I would have to maybe rely on these horizontal trading ranges, diagonal channels, and so forth. But I really believe, Tommy, that the better answer isn't how high will it go. Continue to stay long, play it until we actually can identify market tops. And what I mean by that is, if we go back to 1929, I realize that Paul Tudor Jones had referenced the 2000 top, and we'll take a look at it. But if I go back and we take a look at major tops out there, one thing that they have in common, and if you watch the Trader's Edge show, you know that we take a look at, when somebody calls in and has a request for a stock, we take a look at the daily, the weekly, and the monthly time frame. Monthly giving us a much bigger, broader view. The weekly is kind of an intraday chart for the monthly time frame, the daily and intraday chart, if you will, for the weekly. The importance of going back and doing that, if we take a look at what was present at the Dow in 1929 when it made a top for its daily, its weekly, and its monthly time frame. And the answer is, each of those had Rhodes momentum indicator tops. It's a 5-step process. I teach subscribers. Those folks that aren't familiar with this pattern or listening to the show, as you know, they can sign up, subscribe to Mastering Probability for 29 days. You're going to get access to the courses that teach this pattern out there, and it basically costs them nothing. But the point that I want to make, and I've drawn the blue arrows here, each of these are Rhodes momentum indicator tops. They get confirmed at a top. They get confirmed with bearish reversal candles out there. So on the daily time frame, I've got the arrow that points to the confirmation of that top. I've got the same thing on the weekly. The weekly, when it actually topped, was to the week, right to the week. It was a key reversal bar. I have explained that to folks in the past. And the monthly time frame was just a good old-fashioned bearish engulfing candle that confirmed that Rhodes momentum indicator top. So when major tops form, we will see topping patterns for its daily, its weekly, and its monthly time frame. So that was 1929. Any questions, Tommy, about the 1929 tops?
I like the historical. No, let's keep it going. I'm watching totally.
So now let's just go right to the 2000 tops that Paul Tudor Jones is referencing. When it made its highs, if you take a look at the daily time frame, you'll see a bearish sash, you'll see a black diagonal line. That black diagonal line is referencing the Rhodes Momentum Indicator topping pattern, and that's being confirmed with a bearish reversal candle. Bearish sash is one of those. That identified it in essence right to the day after the actual top. If you look at the weekly time frame, it was also a Rhodes Momentum Indicator top that was formed with a bearish sash candle. You can sort of see the black diagonal line. That's the pattern that's present. The same thing on the monthly time frame. Here we get a nice dark cloud cover candle there. So the daily, the weekly, and the monthly time frame charts, and that's why I show it during the shows when we take a look at instruments out there. If it works for the indices, it's going to work for everything out there. And we could spend hours taking a look at it. Here's the 2007 top. In 2007, on a daily time frame, a Rhodes Momentum Indicator signal. The weekly generated the same thing. That was about 6 to 8 weeks before the actual top, before the actual bearish reversal candle formed on a weekly basis. In the case of the monthly time frame, it was right away. It was also a TD9 count top. That's another pattern, as you know, that I teach the subscribers out there. So again, major tops, we're going to see a daily, a weekly, and a monthly time frame chart that has those topping patterns. So let's fast forward to today, right? Because by now, that should be the question in everybody's mind. Where are we at today? When we take a look, now this was a snapshot taken a half an hour ago. If we look at the daily time frame, there's a Rhodes Momentum Indicator signal that's present. That's that black diagonal line, Tommy, but no bearish reversal candle. Without a bearish reversal candle, we do not have a top. The weekly time frame does have bar number 8 of a TD9 count. And so that has the potential to form a top between this week and next week. But the monthly time frame, no topping pattern whatsoever. So what does it mean if we've got one top but not all three? It means we could be getting ready for some type of intermediate or shorter term time frame retracement that could last 1 to 4 weeks out there. It could just be 1 to 4 days out there. So fast forward to where we're at today. No doubt, no confirmed completed Dow tops. The TD9 count pattern won't confirm until this Friday. So, but it looks like it's pretty solid right now. If we take a look at the S&P 500, the S&P 500 no top on the daily time frame. It does have a TD9 count top that's going to complete this week. Nothing on the monthly. Where we're getting all the signals from, Tommy, is from the weekly time frame. Here's the NDX 100. You'll see this is going to complete a TD9 count top for its weekly time frame. Look how far the monthly has to go. It's got a simple one-to-one price projection up at the 28,000 level.
Amazing.
We're nowhere near that. The daily time frame, no top as well out here at this moment in time. If we take a look at the semiconductor index, it does have a wave number 7 top. That's one of Basil Chapman's tools out there. It's got a weekly TD9 count top that's going to confirm this week, complete next week. Monthly time frame still has much more to go. No topping signal as we speak right now for it. So my take is that, and this is the question you asked, what's my take in the markets? My take in the markets are that we are going to continue to move higher, that we do not have the signals present that suggest that we are anywhere near a major top. If we're going to see that, we're going to see those tops form in a daily, weekly, and monthly time frame, and I suggest that's the best way to identify how far is the market going to go. Not come up with a price objective, just realize how markets actually top.
Quite a trend, man. It really is, on a longer term basis. And I love how you lay it out in the, short term, intermediate, long term. And boy, these longer term charts, I was looking at Microsoft has, you made me think those A to B, C to D, or that expansion, man. Microsoft's got an A to B, C to D, bring you up to like $600. We're at 528 maybe. So it's remarkable.
Yeah, and it's a beautiful thing. And that's pattern recognition.
Folks, check it out, okay? Mastering Probability. You get those webinars. You get Steve's outstanding newsletter for 30 days. Go check it out. Steve, thanks so much. We'll see you on the program tomorrow, man. Have a great day.
You bet, Tommy.